With Indian stock markets losing more than 7% of their value in the past 8 trading sessions, investors are looking at the Reserve Bank of India for some relief. The 3-day meeting of the Monetary Policy Committee, the 6-member panel which decides benchmark rates, began today, and economists widely anticipate a cut in the repo rate by 25 basis points to 6% on Wednesday. The rate cut, if it happens, will be the second cut in 2 months under the leadership of Sanjay Malhotra, the new governor, and will mitigate some of the impact of Trump's tariffs which spooked the markets. Lower rates will reduce fixed deposit returns and encourage investors to explore alternative investment options like mutual funds or market-linked instruments. They will also lower loan rates for companies, leading to a better return on their investments. Lower borrowing costs will also stimulate economic growth and will help balance some of the negative impact of Trump's tariffs. Cheaper loans also mean lower EMIs and will help benefit individuals planning to invest in real estate or other assets. Even the US president is rooting for a cut in interest rates. In a post on Truth Social, Donald Trump demanded the Federal Reserve chairman cut rates. Citing a drop in inflation and energy prices, he asked Jerome Powell to stop playing politics and slash interest rates, triggering this comeback from Powell.
Sure. So let me just be clear at the start. I make it a practice not to respond to any elected officials' comments. So I don't want to be seen to be doing that. It's just not appropriate for me.
This pushback by the Fed chair added to Wall Street's woes, with investors more uncertain of a rate cut by the US central bank than ever before. Jerome Powell's made it clear that he was not towing Trump's line, saying that the traffic hikes were larger than expected, leading to high uncertainty and a rise in downside risk. He also said this could lead to a return of high inflation and slower growth.
We'll continue to carefully monitor the incoming data, the evolving outlook, and the balance of risks. We're well positioned to wait for greater clarity before considering any adjustments to our policy stance. It is too soon to say what will be the appropriate path for monetary policy.
Central banks around the world are in a thick soup after Trump's tariff shocker. Before the announcements, most had taken a dovish stance, with most post-COVID challenges easing. The tariffs, which most agree will lead to higher prices and uncertainty around the world, adds more confusion into the mix. Bureau Report, Business Today TV.
If you like the video, do like, comment, share and subscribe. If you like the video, do like, comment, share and subscribe.